Hello everyone, welcome back to our channel, Additional Income. Today, we're diving into a topic that has everyone buzzing. Is there a gold value reset on the horizon? With promises of a United States gold bullion holding audit and massive gold transfers from London, something big is definitely happening. In this video we will talk about what many believe is going to be a worldwide revaluation of gold, how this will affect all of us, and some potential ways to benefit financially from this modern-day gold rush. So, grab your gold nuggets and let's dig in. The US gold reserves are a topic of great interest. Currently, the United States values its gold at just $45 an ounce, while market prices exceed $20,900. This significant discrepancy raises important questions. Why does the Treasury maintain such a low valuation? Is this an indication that the United States is preparing for a major economic shift? Could the government be stockpiling gold for strategic reasons? Additionally, who is responsible for the recent influx of over 12.5 million ounces of gold returning to the United States coffers? Understanding these dynamics is crucial for investors and economists alike. Consider the implications of the recent movement in gold prices. With national debts reaching unprecedented levels, could a gold revaluation provide a solution to our economic challenges? If Fort Knox were to be found lacking in gold reserves, what would that signify for the US dollar? Could this scenario trigger a financial crisis, or might it pave the way for a new era of gold-backed currencies? These questions are crucial and could significantly reshape our financial landscape. And speaking of crucial global implications, let's not ignore the elephant in the room. Both China and Russia are aggressively increasing their gold reserves, in an apparent shift away from the US dollar. Some even say a shift away from a United States dollar world reserve currency. Theoretically, as de-dollarization accelerates, we could see a return in many countries to a gold-backed financial system. It's a controversial thought, but one that's gaining traction. The BRICS nations made up in Italy of Brazil, Russia, India, China, and South Africa are increasingly turning to gold as a means to diversify their reserves and reduce reliance on the US dollar. This trend is driven by geopolitical tensions and a desire for economic sovereignty. Countries like Russia and China have significantly increased their gold holdings, viewing it as a hedge against inflation and currency fluctuations. As BRICS expands, gold may play a crucial role in their financial strategies and trade agreements. Now, let's pivot to the recent announcement from President Trump directing the newly created Department of Government Efficiency, headed by Elon Musk, to audit US gold reserves. This hasn't happened in over 50 years. What could this mean for the future of gold and the dollar? Could it be a game changer? Or is it merely a political move? And if the audit reveals discrepancies, how would that shake investor confidence? The US government has become a net importer of gold, a shift that occurred around 2020. Historically, the US was a significant exporter of gold, but changes in global demand, investment trends, and economic conditions led to this reversal. The US Mint and other entities began importing more gold to meet domestic demand, particularly for investment and jewelry, as well as to bolster reserves. This trend reflects broader shifts in the global gold market. The US alone imported approximately 200 metric tons of gold, a significant rise compared to previous years. For context, in the 2010s, annual imports averaged around 150 metric tons. By 2022, imports reached around 300 metric tons, reflecting a growing trend in gold demand. This marks a substantial increase compared to decades past, highlighting a shift in investment strategies by the United States government. With gold and precious metals gaining global attention due to increasing central bank reserves and speculation around a potential revaluation of US Treasury's gold reserves, average investors have a unique opportunity to capitalize on this trend. A well-balanced strategy could include investing in established gold mining and royalty companies, such as Franco-Nevada, FNV, Wheaton Precious Metals, WPM, and Newmont Corporation, NEM, which offer stability and consistent returns. For those willing to take on higher risk, adding exposure to junior mining stocks or emerging digital asset plays like Ion Digital Corp, Ioni, could amplify potential gains. Ioni aims to tokenize precious metals, allowing investors to buy and trade fractions of these assets securely and transparently through blockchain. This approach aims to increase accessibility and liquidity in the precious metals market. Diversifying across these categories allows investors to benefit from both long-term gold price appreciation and speculative growth opportunities. I have created my personal investment strategy to capitalize on these shifting market conditions, combining both traditional gold investments and high-growth speculative plays. If you want to see my exact investment plan and breakdown, comment, send me the worksheet on the video, and I'll send you the downloadable resource with all the details. This is by no means financial advice. It is just the plan I have created for myself. I have created it with an initial investment amount of $1,000, because that is all I am willing to speculate with. So, what do you think? Is the US gearing up for a significant transformation in its monetary policy? Are we on the brink of a new gold-backed currency standard? I'd love to hear your thoughts. Share your insights in the comments below, and don't forget to like, share, and subscribe for more updates. Here at Additional Income, we look for the hidden stories in the gold market and beyond, speculative plays and undervalued assets. Let's build true wealth together. Until next time, stay informed and keep your eyes on the gold.